In May 2020, the Bank of England warned of a potential 16% decline in property prices as a result of Rona. What happened next will be a surprise to most.
The UK property market is red hot at the moment. The
graph is upwards.
And the figures are always going up. At some point, does this bubble burst?
The combination of low interest rates, the freezing on stamp duty, and a desire for more space by millions of Brits with cabin fever has led to the average price of a UK home increasing by £25,000 in a year. But with the stamp duty freeze now ending and the UK economy appearing to be hanging on by a thread, one question hangs over anyone looking to secure their castle. Is now a good time to be buying property? Let's go.
There's a lot to be said for giving people a decent place to live in.
When researching this video, I came across a quote by Susanna Ramsdale in the Evening Standard that I thought kind of summed up people's predicament and feelings towards buying a property at the minute. Buying a home is a cruel mix of ceaseless admin, crushing disappointment, and existential panic.
Existential?
I think I said it right. It's that soul-destroying cycle of getting a Rightmove notification to confirm a property meets your criteria, calling them within 3 seconds of it being listed, and being told by what can only be described as a smug estate agent that it already has 10 offers above asking price. Would you think we could view it anyway?
No.
Well, how about a floor plan? The smugness of estate agents is just a reflection of how heated the property market is at the minute. Here's some headline figures. The average house price in the UK has increased by 10% in just a year. Forecasts think 2021 will see more house sales than the previous record year of 2007. The ONS is reporting that the estate agent smuggery scale is at all-time highs. All this pent-up demand and rising property prices is a reflection of the fact that a hell of a lot of people think now is a good time to buy. But are they right? That 2007 start alone is kind of alarming, isn't it? Because, you know, following that record year for purchases, property prices took an almighty crash.
The National Association of Realtors reported the worst month-to-month drop in existing home sales since they started keeping track in the late 90s.
That fever pitch buying of 2007 was fueled by easily available mortgages and marked the very top of the market. If you'd bought at that peak, it would have taken you a full 7 years to get your head above water again and be in a position where you weren't selling at a loss. So which way should we go? Should we be jumping two-footed onto the boat to get ourselves a spot before it sails off into the distance and we miss our chance forever? Or should we wait for this very overheated market to crash when interest rates inevitably rise, knocking the wind out of the sails of the UK housing market and the smug looks off all them estate agents' faces? In the name of being balanced, let's look at both sides of this and then I'll give you my opinion. Let's start by looking at the positives.
Reality is in London they went up by 4%, in the country they went up by nearly 8%. So it is a particularly active market.
When looking at the factors that could drive up property prices, we need to consider both the short-termish kind of factors and some of the more persistent influences that have driven property prices up over decades in this country. First of all, we have the current economic climate and specifically low interest rates and the threat of inflation. We spoke about inflation recently, didn't we? And the same rules apply here. There's a correlation between scarce assets and rising inflation, and homes in the UK are a scarce asset. Add to this as well that with inflation we see the cost of raw materials used for building homes increase, so houses become more expensive to build and thus we see house prices rise with the rate of inflation. The key question to ask yourself here in relation to property is how the government will react in terms of interest rates. Interest rates are really simple. Most people when they buy a home borrow on a mortgage. The interest they pay back on that mortgage is linked to the Bank of England base rate. This is the rate of interest the central bank sets, and then your mortgage lender bases their rate of interest off of this. The lower the Bank of England base rate, the lower the interest rate on your mortgage will likely be. And with us being in a period of historically low interest rates since basically the financial crisis, mortgages have been comparatively cheaper now for over a decade to say what they traditionally have been in the past. A 100k mortgage with a 2% interest rate is 370 quid a month. If you move that to 3%, then it's 422 quid a month. 4%, 477, and 5%, 537. Exactly the same house, exactly the same amount of debt, the only thing that's changed is the interest rate. Lower interest rates make people think they're richer when it comes to buying houses because their affordability looks better on paper. They think that they can afford more house per month because the interest rate's lower. What that means is people tend to buy bigger houses at the top of their affordability and will push prices up because they think that they can afford more debt. The Bank of England recently confirmed it will be keeping rates really low, which is a good sign for property. But then in reaction to this, the banks increase rates anyway for mortgage products. Maybe that's a sign that the banks think that the base rate from the Bank of England is going to go up anyway.
Interest rates will need to rise.
Historically, the average interest rate has been between 4 and 5%. We can see that these rock bottom rates that we've enjoyed for the last 10 years are far from normal. The Bank of England is going to be reluctant to raise interest rates too quickly. The economy is already looking kind of fragile, and if you slap everyone around the face with extra mortgage costs, it's only going to make the problem worse, isn't it? But if inflation proves to be rampant, it might force their hand.
We will have to take that step if we think that there is a risk to the economy in terms of it overheating.
Let's now take a step back, and instead of looking at the driving factors in the last few years, let's look at what's been pushing property prices up our whole lives. House building targets seem to be a feature of most manifestos every time a political party is trying to get into power. Lofty promises of hundreds, thousands, if not millions of homes.
We are also going to build more houses. I think everybody knows that there's a huge shortage.
I want us to build, 1 million homes by 2020.
All too often those promises fall flat on their face, and the government comes nowhere near to achieving building targets to deal with what's often described as the UK's chronic housing shortage.
But house building in England has gone down from a peak in 2007.
It is estimated that the UK needs 345,000 homes a year to catch up with supply issues. Between 2019 and 2020, we built 244,000.
Damn good, bloody good, damn good job.
We are rubbish at hitting these targets, and the events of the last 24 months look to only further compound the problem. The cynics amongst us might actually point out that a lot of those 200,000 homes don't really go anywhere towards solving the problem anyway, because they're all inner city, really expensive flats that don't cater for the need for cheap, affordable housing here in the UK. You could also go on to say that a lot of influential wealth is tied up in property prices, and they might have an incentive not to see millions of cheap homes dumped into the market, because that increase in supply would reduce demand and thus reduce the average house price. We have schemes like the Help to Buy and Lifetime ISA, but that is more supplementing demand than it is increasing supply. Giving first-time buyers a leg up onto the property ladder does not solve the shortage in housing problem.
Under David Cameron, the focus was less on building and more on schemes like Help to Buy, and 300,000 people have got onto the property ladder through such measures.
Every election, politicians have promised to address the UK's housing crisis, and ever since I've been on this planet, none of them have ever come near. If that's intentional or if it's just a really big problem that's hard to fix, I don't know. But as long as supply isn't increasing and demand keeps rising for properties here in this country, then you can bet over the long run the price will increase. An article from The Guardian 2 months ago talked about how Lloyds Bank planned to become a huge landlord in the UK. I think this is telling of how this bank at least is betting on UK housing as an asset class long term. That's the bull case right there for why house prices in the UK might continue to rise going forwards. But before you kind of dive in headfirst into a fixer-upper, let's look at some of the negatives. The glaringly obvious one is the removal of the support for both stamp duty and furlough. These recent measures to prop up the UK economy did exactly that. Millions of people's jobs were saved because of the furlough scheme, and the housing market kept on ticking as a result of the stamp duty freeze. Well, I mean, it went absolutely bonkers as a result of the stamp duty freeze. But what happens when you pull the plug on these types of measures? In the same way that having low interest rates makes mortgages cheaper, which improves people's affordability, so they bid more for houses as a result of that, the removal of the stamp duty meant that people had increased affordability to purchase homes. Stamp duty is pretty much dead money. A tax you have to put down in cash that you don't get to add onto the mortgage. You literally need your house deposit and then you need cash on top for stamp duty. When the government froze stamp duty, all those people that had saved up that stamp duty to buy a house suddenly found that they had extra money. That extra money then found its way into the valuations of homes up and down the UK. Now that we've seen these measures come to an end, many believe that we'll see a cooling off in house prices. As a result, people basically realising, oh, I need loads of money for stamp duty now. Another thing that needs to be considered again is interest rates. Everybody loves interest rates. Yes, they remain low at the moment, but if the Bank of England are forced to raise interest rates to cope with high inflation, mortgages become more expensive, house prices will fall to match people's new lower affordability, and estate agents ain't acting so smug anymore.
You've got no fans?
No fans. This all started with the Bank of England saying they were worried house prices would drop. Fast forward to today and the prices of houses have rocketed off the back of a potent cocktail of low interest rates, decades of failing to meet housing targets, inflation, government support, and 18 months going crazy staring at the same four walls. Now we stand here at a crossroads, and down one path are property prices that just keep on rising, keep on trucking forwards, and down the other, a cliff. But we don't know which road is which, and we got to start walking down one of them soon. What do we choose? Should we be buying a house now? All I can do at this point is give you my opinion for whatever that's worth.
You said that like we're supposed to give a shit.
Property's a funny thing here in the UK. We are obsessed with it. It feels like a rite of passage and signifies security in one's life. Your home is your castle, your pride and joy, the biggest purchase you'll ever likely make, and to many, they call their home an investment. And here is probably one of the problems. We want our houses to be too many things. If you come to me and go, Damien, is it a good time to invest in the stock market now? The parameters of that question are clearly defined. Stock market and investing. Whereas if you came to me and said, is it a good time to buy a house? I'm going to come back at you with, are you going to live in it or is it an investment? How long do you plan to own it for? What is your current living circumstance? Are you renting at the minute? And if this is an investment, what does it look like from a cash flow perspective each month? When you're asking the question of is now a good time to buy a property, why are you asking that question? Are you worried that house prices are about to slide 10%? If they did, how would that affect you? If it's your home, you just keep on living there, building equity and riding it out. And let's say you do wait it out instead and continue renting. How much money have you just burnt on rent while waiting for a crash that may never happen? 800 quid a month on rent is 10 grand a year that you're guaranteed to lose. Gone. It's disappeared. It's in someone else's mortgage now. Or you could take the potential loss on the property, the potential that it might drop in value, but at the same time, you're building equity underneath that to offset some of that anyway. If it's an investment, first of all, you're securing a property with some exceptionally cheap debt attached to it. Inflation will likely outpace your interest rate on your mortgage at current rates, eroding that debt away for you.
Eroding.
As long as it cash flows from a rental perspective, what's the concern? Yes, we all want capital appreciation and for the value of our properties to grow, but unless you can add value, by improving the property, relying on capital appreciation, especially in the short term, is a touch risky. The main thing I would be doing right now is stress testing your mortgage. Try it at different interest rates to make sure if you're buying it to live in, that it remains manageable, and also if it's an investment, that it still makes sense month to month at different interest rates. Interest rates will move the goalposts. You don't want to be in a position where what was once a great investment suddenly becomes something that sinks you financially. I would personally be looking to fix the initial term of the mortgage for as long as I can in order to lock in today's low rates, which I personally think are only going to increase in the future.
We do think that interest rates will need to rise.
5 years fixed or whatever for me, because honestly I can't see mortgages being any cheaper than they are right now. Realise the price could go either way in the next few years. Property cycles are a very real thing. It's like stocks and shares, guys. If the whole market takes a tumble in the short term, we don't panic because we know the data says that long term these investments make sense. For those of you who are sat there worrying that you're about to buy your first home at the top of a market and the property prices could slide in the next couple of years, here's a little story from my past for you. I used to sell properties for a business called Night Knocks. That's right, I was a smug estate agent as well, and that's why I can rinse them.
Wanker.
It's a property investment company that basically sells apartment blocks that haven't been built yet to wealthy individuals. I meet people of all shapes and sizes and financial backgrounds, everything from, high paid executives all the way up to Middle Eastern billionaires with thousands of properties. If you ever got onto the conversation about their portfolios and kind of the regrets or what they would have done differently, one common theme always stood out. It wasn't the properties they bought that they regretted, it was the ones that they had sold. If only I hadn't sold it, it would be worth X amount now. I let that one go and it rocketed in value since. I should have just held on to that one. Even those people who bought in 07, 08 are sitting pretty today if they didn't sell. The moral of the story is, as we sit here in 2021, UK property prices have never been higher. That means there has never been a bad time to buy, only ever bad times to sell.